Is the US housing market bubble about to pop? Are we to be worried about the US housing market bubble popping this very same year of 2020? Let's have a look at what the trends in the US housing market predictions are telling us. Since the end of the Great Recession in 2009, the United States has undergone a tremendous economic expansion, which is now considered the second largest in the history of the country. 11 years later, the national housing market has come a long way since those perilous days. The value of houses continue to hike in many markets, and this is expected to continue, although many speculations have it that the 2020 real estate prices are likely to crumble down. The ever-increasing number of buyers combined with reduced number of homes to buy has been contributing towards the rise in the general price of homes. However, that which goes all the way up will always come down. Considering the demand has been accelerating the price increase for some years now, many are worried that the 2019 housing bubble is on its way to bursting in the 2020 year. After all, it is such popping which led to the Great Recession, which occurred between the year 2007 and 2009, with some still experiencing its effects up to date. Therefore, it's natural to be curious if a housing market recession is on its way before the end of the year, and if so, how will this affect buyers, sellers, and the investors? Here's all that you need to know. Housing market bubble. Prior to digging deeper in this popping matter, let's have a quick look at what a housing bubble is and the factors behind its occurrence. According to Investopedia, a housing bubble is simply an increase in house prices emanating from a high demand, speculations, and exorbitant spending to the verge of collapse. Some of the factors leading to increased demand of houses include increased economic performance that could encourage people to own homes, upturn in population entering the housing market, decreased interest rates which makes the cost of acquiring new homes low, and increased risk-taking behavior by the mortgage borrowers and real estate developers. The above parameters can work together to bring about a housing market bubble. Of course, house prices will usually be fueled by the law of demand and supply. Usually, the supply of houses will lag behind as compared to the demand, simply because it takes a lot of time to build a house, and in some areas, especially the urban centers, the land for putting up buildings isn't readily available. Therefore, with high demand and inadequate supply, house prices will naturally increase. In some instances, however, aspects such as increased mortgage interest rates and the depressed economic activities will decrease demand. Combining this with the high prices of getting a home, it becomes almost impossible for buyers to acquire new houses. Furthermore, homes which have already been owned become unaffordable, leading to default and foreclosure. With time, the number of houses available increases as the demand tends to reduce. The risk takers will eventually leave the market, and a sharp drop in home prices is experienced, leading to a housing bubble burst. This is finally followed by a recession, as was the case in 2007 to the 2009 Great Recession. Is the housing market bubble about to pop? Zillow, a US-based real estate firm, conducted a survey where more than 100 real estate experts and economists were interviewed on their view regarding the popping of the US housing market in 2020. Results from the survey depicted that nearly half of the respondents said that they perceived a recession of the US housing market to take place in the year 2020. In a more recent study carried out by the National Association for Business Economics, where 200 experts were involved, 38% of the respondents stated that they expected the housing market bubble in the United States to pop this year, while 25% stated that it will likely start in the year 2021. In summary, most experts predict that 2020 is the year when the US housing bubble will pop. However, according to both surveys, experts agree that unlike the 2007 and 2009 popping of the housing market, this year's pop will not likely be the main cause of the impending recession. The US housing market prediction for 2020. In order to comprehend the new housing market recession and answer the question of whether we should be worried about popping of the housing market bubble this year, we need to understand the prevailing market trends as well as the 2020 real estate market forecast. Below is a detailed summary of experts' opinion on whether the housing market bubble will pop this Aspiring buyers are expecting home prices to crash due to the ongoing effects of COVID-19. However, experts aren't seeing this coming anytime soon. For a recession to actually influence the prices, it has to make substantial depression in either housing supply or demand. Realistically likely to happen at this time, considering the unemployment is quite high and the undersupply of houses is still being experienced. Number 2, strong lending policies. Economists attribute the 2007 to 2008 housing market crash to the chaos which had locked the real estate sector. Lenders extended risky loans and borrowing incentives without carrying the appropriate due diligence process, which is considered vital in the mortgage sector. Actually, some lenders made use of automated processes to extend loans, and therefore there was no appropriate review and documentation process. However, after the burst of the housing bubble, lending laws were solidified, and therefore today real estate sector has a much stronger ground. Number 3, the demand for homes is expected to remain low. Since the year 2019, the demand for homes has consistently been low, and experts have reasons to believe that this trend will not change anytime soon. According to Zillow, 2020 is likely to experience even lower housings in demand compared to what we experienced in 2019. This explanation has been that buyers simply can't afford the increased costs of purchasing homes as the prices are beyond their reach. Therefore, developers have been reluctant to add onto the existing inventory of homes, and therefore the possibility of a recession this year is not that huge. However, there is a consensus on the bursting of the housing market bubble if the current price of homes won't be revised to align the average wage of the majority. Cities likely to experience crises in 2020. Although it is good to have a national outlook on the housing market trends, it is to be remembered that real estate in most cases is local and market conditions will usually vary from one city to another. While the national trends doesn't point to a recession anytime soon, 24/7 Wall Street stated that around 13 cities were the most vulnerable to a housing market bubble burst this year. These cities are Seattle, Durham, Portland, Provo, Colorado Springs, Nashville, Salt Lake City, San Jose, Austin, Fort Collins, Denver, and Greeley. Since no one can currently predict the behavior of the market, we're only going to have to keep a close eye and hope that things do work out for the best. To be honest, I wouldn't really expect the housing market to be heavily affected by the coronavirus situation, although it does actually affect the economy in a very bad way. I would expect the housing market, if it did take a dip, to actually recover and probably go to new heights, considering right now no one can really afford a house because millions of people are out of unemployment. I mean, maybe that might be the cause of the bubble to pop or a cause of something that we haven't seen before, but currently we're not seeing anything crazy just yet. I would say just pay attention to the housing market if you are planning on buying a house, because if it does crash, you definitely